Hi guys, welcome to EMS Trading Room. My name is Musugud Peter and I'm a financial trader. I do trade forex, crypto, and sometimes I trade stocks. So I've been in this game for well over like 2 years. So the purpose why I've created this is because I've done my research and mentorship, and I've now come out to present to you guys the most realistic way to trade the financial markets. Okay. So I'm going to show you guys how to trade like the big banks and the hedge funds, because I'm more of a technical guy and I like holding my positions, because we're investors and we want to grow our capital. We don't want flipping and chasing quick money. So the way I trade is more of a methodology than a strategy. Like it needs your psychology to be on point and clear. So I'm going to take you guys through it in a minute. So as you can see, I have two levels here, and the time frame that we're on, we're starting from the monthly. Why? Because this is the time frame that like we use for knowing the overall direction. We need to know the direction that the big banks and the hedge funds and any institutional traders, like need to look at the same levels they are looking at. At the small, we need to look at the bigger picture. So we need to know the overall direction, and because we want to know what the big boys are doing. If they're buying, we should also be buying. If they're selling, we should also be selling, not just trading blindly. So like, how do we tell the overall direction? Because it's how do we tell the overall direction? How do we tell where the market is going on the monthly? First we use the monthly. Then so first we shall be using the monthly. And why we're using the monthly? Because we want to look at the bigger picture. So from there we're going to just use a basic laws of price action: higher highs, higher lows, equal highs, equal lows. This uptrend, lower lows and lower highs. What do you get? You get a downtrend, like we're selling. And then if you get equal lows, equal highs, like the market is just bouncing here, bouncing there, support and resistance. That's a ranging market. So what can you see right now? As you can see these levels. There's one touch here, one touch here, two touch here. This was first support way back, like back then, like in 2012. Then it reached it over, created support here, one touch, two touch, three touch. Then it came above here, back to this place which was support, now turned to resistance. It came back here, it came back down to support. From support it went back to resistance. From resistance it came back down. So you're saying right now we're in a range, some kind of range. We hit down, we go back up. So that's what I'm telling you, using basic laws of price action. Nothing too confusing, all this and that. You just need to know how to plot your levels. So on the monthly, those are the only two things we need. It's just understanding where the market is going. So after understanding the overall direction and we have got space, we know. So right now, where are we heading? We're heading to what? To resistance, from here to here. So this began in January, and so now we are going over here to resistance. So what should we do? Right now we are buying. So after understanding this, we can't trade on this because it's a big time frame. Our stop loss would be way too big and it would be meaningless to be doing all that. So we go to the weekly. So on the weekly, what do we come to do? We come to plot key levels, and like this is like we spot key levels and chart patterns, like double tops, triple tops, head and shoulders, inverse head and shoulders, and minor support levels, like where we'll be taking out some of our open positions and where we'll expect the market to respect. Like, take an example, this level here, this here. Could you see this was like some sort of a triple top. Price reached it, breakout, retest. Very simple. Breakout, retest, continuation. Where's our target? It's over there. So you can see right now, this was breached and it was a breakout, retest, continuation pattern. Simple. I'll be taking you guys through this once we continue. So if you're enjoying this video, you could leave a like and subscribe to the channel so we could grow. So after marking out the skill levels on the weekly, simple, this is an uptrend. You can see this over here. It's an uptrend. It's going up. You see? You get it? Simple. So what do we go to now? We go to the daily. I forgot to tell you guys. I put these two key levels here because you can see this is like some sort of I don't want to call it minor, but some sort of range. This in here between these two bars. Couldn't trade in this because the candles were looking too choppy. So I was like, what I said to myself, if we get a breakout here and a retest here, that's when I'll be buying to the overall target, which is this blue bar here at around 1.22533. So after getting that right, I put these two bars, those yellow bars you're seeing there. So now after spotting your chart patterns and kilos, we move on to the daily. So on the daily, we come here to spot the immediate trend within the overall trend. If the monthly is telling us to go bullish, the weekly is telling us to go bullish, we will then wait for the daily to also tell us to go bullish. Like, do not trade those small pullbacks. Like, don't trade this. You have to wait for a move when it's telling you, okay, we are free to go bullish. Now here we have just come to spot the immediate trend. So once the daily is correlating with the monthly and weekly, we can then move on to the 4 hour and 1 hour where we execute our trade. So I have different entry methods which I use. I'll be telling them to you, but right now the best I can tell you is the counter trend line pattern. It's the best of them all and most common, because right now what we are going to see, what I'm waiting for right now is price could fall back down here and then come out and then a retest and then a continuation. So ideally I'll come to the 4 hour breakout of here. Why? Let me show you something. You see this looks like a head and shoulder pattern. So this is the left shoulder, the head is now coming back down to form the right shoulder. And you know the laws of price action said that once a head and shoulders pattern forms and we get a breakout, we shall always have a retest back to the neckline. Where's the neckline? It's this yellow bar here. That's what I'll wait for. On the 4 hour, I'll come over here. What will I do? This will be my position. Something like this. This. You can see I have like a 4.47 to 1, which is pretty good for me. I'll hold the position. Let me show you like what I expect price to do. Expect price to fall from here, to come here, raise, breakout with a bullish daily engulfing candlestick, then a fall back down here. So after the fall back here, then that's when I'll expect price to continue. Sorry, this is a mistake. You get what I mean. I expect it to continue to there. You see, this is what I'm expecting. Fall, rise, back to the neckline because of the laws of price action that I just stated to you. Then to the neckline. Then that's where we shall be closing out our position. So I've been on your USD, but I've been showing you guys your USD, but so there's one thing I want to do with all you guys as a community. I want to get a 1K account, and we're going to grow that account in a period of 12 months, maybe by 60 or 50, 60, 70%, which is a good return. Because imagine if we're growing an account, we're managing funds of maybe 1 billion USD, 70%, even just 30% is good. Because man, if you're having 1 billion, that's like 300 M to yourself at the end of the year. And then profit sharing with your investors, very simple. You don't need to be a flipper every time, because we're not gamblers. We're not here to gamble. We're investors. So next time next time I'll take you guys through different pairs, because I can trade crypto, I can trade stocks, I can trade anything with this methodology. It doesn't take me that much really. So I'll be taking you guys through GBP USD. You can see I already have my levels there and it's uploaded. So I forgot to tell you one thing. The reason why Euro USD is still stuck like right now is because of DXY. Okay, I'll explain this in the next video, but DXY is like a twin brother to Euro USD, but only that he does the opposite what Euro USD is doing. If DXY is the dollar index, it measures the strength of the dollar. So right now the dollar is falling, but it was falling. So once it's falling, we expect Euro USD to be buying. But right now, why we are stuck right now is because DXY has hit this trend line, monthly trend line, and the laws of price action said that this is one touch, two touch, three touch, or it makes the big move. It could send this market flying all the way here. And that means Euro USD could be selling. So right now what we have to be doing on Euro USD, don't be buying yet. First sell, wait for confirmation. If we can get a breakout of the other levels, the two yellow bars that I showed you, then we are good to go. So guys, thank you for attending with me. Don't forget to smash the subscribe button and like the video. And you can call more members if you enjoyed the content that I showed you. Peace out.